Hello everyone, and welcome to this panel on oracles for RWA. I would like to invite the participants up here. So, Stefan, Žiga, please come up. Okay, we are all here, and again, welcome to this panel about oracles for RWA. We're also going to focus a bit on interoperability and security under this. My name is Mathias. I'm the head of product at Partisia blockchain, and today we have a phenomenal setup of participants here. Let me just briefly introduce them. We have Stefan Rust, the founder and CEO of Truflation. We have Cowell from Moosh network, founder, and we have Niklas, Kunkel, founder of Chronicle. We have Žiga Drev from OriginTrail, CEO and founder. So just to set the stage, at Partisia blockchain, we've been working with RWA for a number of years, probably also before it was called RWA. I think we called it tokenizations and NFTs with programmability at that time. And we really focused on that for two reasons. First of all, our infrastructure is very fit for that, with our interoperability, sharding, with the privacy and the identity. And also because we sort of observed that's one of the mega trends along with AI. And just to put that into perspective, the RWA value locked on-chain has already surpassed the DeFi value lock. And if you look at an industry like traditional finance, they just put a tiny fraction on their assets in tokenization yet. And they realized that this is a superior platform technology. So once that starts to pick up, we'll see hopefully trillions of US dollar of value moving in and becoming tokenized real world assets. So a very key component of this RWA is oracles. And that's what we're going to talk about now. My first question would be around an introduction, and it's going to be a tough one because I want you to introduce yourself and your company in under 1 minute. So, Stefan, would you like to start?
Hi, I'm Stefan Rust. I'm the founder and CEO of Truflation. We launched a oracle for real world, putting that on the blockchain as an app chain. So we built an application-specific blockchain where we then actually do the storage of verified data and the compute of indexes on top of that. So anybody can create an index using real-world data.
Yeah, hi everyone, Josh. I'm a bit of a human oracle, I would say. I've been 14 years in the Web3 space, and then just shy of a decade in traditional finance. I was with Moody's in risk, which is very relevant to trust and oracles and things like that. So founder of Moosh, it's really the epitome of everything I've done in that time. So in a general sense, joining trustless with trust-dependent systems. Trust-dependent systems often involving human beings or Web2 digital signatures, and then trustless systems being things like blockchain that are isolated networks that can't really see what's happening outside. So we need those bridges to join those together.
Hi, I'm Žiga Drev, one of the founders at OriginTrail. At OriginTrail, we've always been improving transparency and trust in different domains, such as supply chains, transportation, real estate. And since 2013, we have been involved with different companies from supply chains like Walmart, Home Depot, Costco, for instance. They're using OriginTrail to exchange audit reports on imports to the United States, encompassing some 40% of the overall imports. We work with Swiss Federal Railways, so anywhere where transparency, trust is needed to ensure that there is, safety for passengers, safety of consumers. And lately, we have been making sure that whatever data, whatever information is being used to train AI models, it is also traceable and has this information lineage, which is also crucial for RWA. So, looking forward to be discussing in this wonderful panel.
Cool. Hi, I'm Niklas Kunkel. I'm the founder of Chronicle. We actually created the first oracle on Ethereum in 2015. Back then, it was just for MakerDAO, so it was like purpose built for DAI, and we couldn't have imagined what this whole like DeFi ecosystem would have evolved into. Fast forward a few years. Today, Chronicle is the second largest oracle in crypto. We secure just over $10 billion of TVL, including for DeFi heavyweights like Maker, Spark, Morpho, and a plethora of others.
Okay, awesome, thanks. So let's get into the stuff here. And let's try to keep it short and crisp in the answers, and feel free to pick up a topic and continue the conversations. We don't need to follow my questions necessarily. So I want to start off, talk about that whole idea about blockchain and tokenization. So it seems like a lot of industries and the real world is very interested in this and starting to take it serious and deploying things. So what is it that makes blockchain and tokenizations appealing for RWA and a superior platform technology in many cases? And where do oracles fit into this? Yeah, anyone wanna?
Sure.
Okay.
So I think that many financial institutions try to create platforms. But these platforms don't get a lot of adoption because they don't necessarily have credible neutrality, right? You don't necessarily want to play in the house of your competitor, right? And so blockchains kind of serve as this universal layer that everyone can kind of participate in, right? Everyone has kind of the same rules. And programmatically, right, you get this kind of determinism and in most cases, immutability, right? If you don't get the immutability, you should probably not call it a blockchain, right? And so how do oracles kind of fit into all this? Well, blockchains are kind of like a black box. It's kind of like putting your phone on airplane mode, right? How useless do the apps on your phone become, right? And so the rich utility that you enjoy in your applications comes from your application's ability to send and receive data, right? And so oracles are essentially this mechanism for blockchains, right? Where they can infiltrate and exfiltrate data to give dApps, right, this rich utility that you expect.
Okay, thanks. Yeah, Josh, go ahead.
Yeah, I'll keep it short because I really want to answer. So really what real-world assets and tokenization does, in my view, is it opens up new net markets. So what I mean by that is in the real-world asset space, bonds, real estate, other traditional assets, we're looking at 450 trillion, there or thereabouts. In our bubble here in Token2049, it's 2.1 trillion market, all of crypto. Bitcoin's roughly about 1. So there's a huge opportunity there for these assets to migrate. Now, the two qualities that real-world assets and tokenization give are, okay, A, it lets you bring a digital twin for an asset that gives you collateral benefits, so you can have different types of collateralization on there and diversification of your portfolio, but it also allows fractionalization. So in terms of edge markets, things that couldn't previously be tokenized, you can now do that, which reduces the barrier to entry in terms of ticket price for new investors to come in. So it's no longer kind of a walled garden of how much capital do you have to deploy to buy certain things. And number two is basically going to be the efficiency gains. So when you bring things on chain, you remove all these esoteric back office problems that you have. So the inefficiencies of human beings. Bring it on chain, data moves itself around based on those on-chain parameters and functions that you define. So it's the killing two birds with one stone. It's really what are those assets that can benefit from newly being tokenized and can basically, I'll just leave it there. I'm rambling for a couple of minutes.
Awesome.
Yeah, but I think you highlighted the point. Why we're in this business is because it's actually a very attractive business as these 450 trillion, as you call it, moves on-chain. They are going to go on-chain. All of this is going on-chain. These are new rails. And there are ways that you're going to take the traditional products and try to tokenize traditional products. But there are also ways where these products are going to be created as synthetic assets. And that's where you need the price feeds for these synthetic assets. How do I know what the value is of those synthetic real-world assets? And that's where oracles become really important. And I think that's going to move on-chain a lot faster because you got the developer creativity and innovation that's going to move at a speed that is going to be X the amount of traditional momentum in this space.
Okay, Žiga, you wanna? Yeah. Okay, sure. So I think this is a good question for you guys, because you are sitting with the oracles, but you're also working with a lot of the builders, and I'm building a layer 1 infrastructure. So when you talk to all these projects that want to build RWA use cases, and when you are building your business, what is the requirements from a layer 1? And you can think ecosystem, features like interoperability, privacy, and so on.
Yeah, one measure, I think a good one, is also how sizable the community is. How many developers have already entered the layer 1 which you're choosing. Another one is having bridges, having security, all the needed support. Another one might be, general legitimacy of the chain used, and how well it is recognized by, let's say, less traditional crypto entities, or non-crypto natives, and also the ease of use. So how quickly can your developers find themselves around within the ecosystem, and what kind of level of support they can receive. And also another one which we kind of feel is important is that whichever layer you're using is not, positioning itself as an Ethereum killer, because I think there's been plenty of Ethereum killers, and none of them has actually succeeded at being a very successful one. So general kind of like friendly approach towards other ecosystems, because that's the way you build interoperability. RWAs on single chains are far less valuable than the RWAs that can, transition across chains. This is how you build network effects. I think those factors pretty much describe at least our readiness to work on different protocols. And we actually built decentralized knowledge graphs on several of them. Starting with Ethereum back in 2016, we saw it's not scalable, it was too costly, and then we started to play around with other layer 2s such as Gnosis, Polygon, back then Matic, nowadays Base. So we built a multi-chain underpinning, which is then crucial for us to be nimble as in terms of both scalability and also in terms of where the community is and in which layer 1 ecosystems we can best deploy the latest innovations on that are connected to the decentralized knowledge graph.
Just to lead on from Žiga about that community aspect, that has some sense of decentralization to it. So who's actually using the protocol? It's not just the protocol itself in terms of code, but if you want to go the protocol angle, the actual layer 1 has to be decentralized, right? So what's actually supporting that layer 1 in terms of infrastructure? So that's my thing. So it's the infrastructure being decentralized, so the transaction layer of Web3, your Ethereum, your Bitcoin, everyone storing value, transacting value. The infrastructure level has to be decentralized, at the community level has to be decentralized. But then in terms of the protocols, one thing I actually work on is people aren't often familiar with the term homoiconicity. That's to say that your Ethereum virtual machines, even your ZK EVMs today, they're still plug boards like the 1960s. You sit there and you, like an operator with cables, and you tell it to do stuff, but data isn't a function. The program can't update itself and write it from within itself. So that's going to be a real big problem when we try to use oracles from going outside of these blockchains where they can't actually get this data from the outside world. If we can solve that and maintain the trustless and the trustless aspect of blockchains, that's where I think kind of the AGI moment for AI equivalent of oracles is going to happen.
Yeah, I mean, I don't have much to add there. I just think that there are two elements, right? We're all working on the infrastructure and the underlying capabilities to be able to deliver an amazing user experience. And I think from a layer 1, it's really what usability will be towards a B2B market. So either a developer, and what's he going to build towards their end user? It's the end user. They don't care what technology it's running on. I just want to know it works and it's a great user experience. The people that have adopted and what we've built, the user experience of the blockchain today, is speculation. So I want to be able to trade and move in and out of assets really quickly, easily, and I don't care what chain that's on, but where is the best value and what's the arbitrage associated with that. How do we do that for real world products and items and assets, right? And I think we started off, anyone know what RWA was? I found out that in the TradFi world, they called it, RWA means risk-weighted assets, right? Yeah. I didn't even know that. So we actually call it something totally different, which means we're living in a whole different world in the blockchain world. And so we need to find new developers that are going to actually embrace this. And it's not trying to really just force other new, sort of existing developers to come onto the blockchain, but it's really build a whole new ecosystem. And we're now at $2 trillion. And I think it's going to grow, to the $450 trillion that you mentioned earlier. So.
Okay, yeah. So just over to you. We are talking a lot about these hundreds of trillions of dollars, and that I don't personally believe that will be on one chain. I think it will be fragmented across private chains, public chains, hybrid setups. Also because that's sort of the nature of this industry, to be decentralized and fragmented, and that obviously requires some kind of mechanisms that can eventually tie this together with the interoperability. And a lot of security. So my question would be, how does Oracles contribute to that idea about building interoperability with all this fragmented value?
So, the end game here is that you're not even going to know what blockchain you're transacting on. It's like when you swipe your credit card, do you think about like the mainframe that your Visa transaction is getting processed on? No, right? In the end, the answer to all of this is oracles, right? In the crypto ecosystem, right, I think there's this misconception that oracles just kind of like give you the prices of stuff. And so everyone just kind of like thinks about them in that way. But oracles just transport data from point A to point B, and they give you two guarantees, right? They give you data integrity guarantees, so they have some way of guaranteeing you that the data is correct and not false, and they give you data availability guarantees, right? So that the flow of data is not going to stop, right? So as the oracle operator, you can't just like censor the data from coming in, because sometimes stale data is as bad as, false data. And so when you reconceptualize oracles as just like data transport mechanisms, then all of this like multi-chain interoperability, right, it's just easy, right? Because how do you get blockchain A and blockchain B to talk? Well, it's just an oracle in between. How do you bridge tokens from, RWAs or crypto native tokens from blockchain A to blockchain B? Well, it's an oracle. It's all just oracles all the way down. Right, and so really it doesn't matter, right, how many chains are there going to be, like, oh, this RWA was issued on this chain, right? But I think someone mentioned it earlier, right? There will be a digital twin, right, on another chain, right? And they will be linked, and they'll be linked through an oracle, right? So whatever happens to the digital twin, right, eventually makes it back to the original, and the original just kind of updates its carbon copy.
Yeah, I think it's a really good question, because the strength of an RWA is kind of defined by the liquidity behind it, right? So what is the purchasing power that can access that RWA? So yeah, we have to link all these fragmented liquidity pools. So I think the way that's going to happen is standardization of protocols. So for those here that aren't as Web3 savvy, perhaps, if you're familiar with the current internet, we do have standardized things. We have HTTPS, we have TCP/IP, we have SSL. You guys don't know you're using it, but they're all standard things for machines and people to talk to each other. And it's succeeded. The internet's still going, since the 60s. So it is possible to have this standardization of protocols, and it will work. Layer ones, for example, always have that trilemma of security, speed, scalability. One thing we overlooked with Web 2 was the scalability. So with IPv4, we only had 4.3 billion IP addresses. Those funny numbers that get masked by Google.com, you don't even see those anymore. We need to think in the future, it's not just going to be humans who are using this Web3 network. We're going to have AI agents. We're going to have the Internet of Things. We're going to have quadrillions of agents working on this network. So all we've spoken about today is, real-world assets coming on-chain. It's going to be symbiotic. They're going to go both ways. You're going to bring all this stuff, this 450 trillion on-chain. Then you're going to have AI agents and IoT and humans using that stuff. It's all got to talk to each other. So it's all about standardization and identity and making sure every agent is genuine and they're all using the same messaging systems.
Okay, thanks. So I think, Stefan, next question here would be that, when we tokenize all these kind of assets, right, that they will, to a higher degree, mimic what we see out in the real world, and oracles will put all this information into that, which essentially is represented by a smart contract that everyone can go in and look at. So you will have a whole nother way of doing risk management and compliance. I'm thinking, for example, a piece of real estate, right? You can suddenly fetch a lot of information into a public ledger registry where you can see it, and it will be easier for everyone who owns a share of that to assess the risk and get it more real time, instead of going down to some office in some country to get some report that's difficult to get. So how does Oracle work into this idea in RWA, where we do risk management and compliance in a more public way with a lot of data feeds from oracles?
Yeah, so that's a loaded question, right? But on the flip side, if I look at, there are so many constituents along the way. If I want to take real world property, real estate, and then try to figure out the land registry, the building, the maintenance associated with that building, and then try to capture all of that, write that onto a ledger, and then capture that, and then tie that then to some sort of fractionalization in some sort of tokenization model, and then manage the flow associated with that. That's one way to do that, and that's going to take time, because you need the land registry, you need government entities to all embrace the blockchain sort of process and go down that path. And there are companies specialized on doing that. Right, there are companies out there that are working with land registries or building owners and REITs to then be able to try and help them tokenize it, maintain the value associated with it, and share that value to oracles, for example, or build oracles specifically targeted at that. I actually think that the market is much more attractive in building out synthetic elements of it. So we work with partners. One of our biggest partners has built the tradability of real estate in its synthetic form in cities that you don't get real estate. I can't afford a house in New York or an apartment in New York, but I can buy a token that resembles the price of an apartment in New York, based on the square foot, etc. So we average that out, we give that in real time, and that then becomes tradable. And then I can follow the price feed, I can see when the last transaction is, how you calculated that, and then I can monitor the actual movement of that, right? So I have a verifiability, a trace associated with the price, and then I can maintain that price on an ongoing, reliable basis. And I think that's a much more attractive way. How do we do that with more, and what other assets can we do that with? We can do that with all assets that 1.7 billion people around the world don't have access to. How can you buy an apartment in New York? How can I get and buy shares in Tesla? How can I get access to all commodities? How can I buy copper? I believe in lithium. I believe in electric vehicles. I want to buy a share in lithium. How do I get access to that? At the moment, you need to be a part of 15 specially influential banks that actually trade commodities. They're the only ones that can actually trade those. And now, all of a sudden, through the tokenization of these assets and monitoring thanks to oracles, we can have a price feed, and then people can start trading that, whoever wants to trade that. And that, I think, is the way that we are going to shift the traditional market into blockchain and bring them along this way. Because if they don't, they miss out.
Okay, awesome. Žiga, you want to take a step of that and maybe also talk about sort of democratizing and make it more accessible for the community?
Yeah, what makes RWAs interesting and RWAs in the crypto sense is it's about the real world asset. Although we don't see much of the actual evidence of this taking place with regards to real estate, which one example is really awesome. Although now it's more about, you know, the on-chain data, perhaps T-bills, stuff like that, like easily tokenizable. But the RWA, it's you know, because of it stands for real world asset. It could be about, you know, the real estate. It could be about the cars. It could be about pretty much anything that is you know, being used by common people on everyday basis. And if you want to attach a price and value to those things, you need to connect more attestations around those real world things. With respect to real estate, for instance, you need to provide attestations with regards to the maintenance, perhaps in some cases, and this is something we do with European universities, for a little bit more historical buildings. We measure performance of those buildings. We measure how well they're performing in terms of the energy efficiency. Energy efficiency also impacts the or should impact the price of real estate. So information that is not, at least not today readily available around that kind of real world asset is going to play a crucial role in estimating what the fair price is of this real world asset. And especially if you go beyond borders. So me trying to buy a real estate in New York, for instance, I'm not going to go there. I want to buy it, but there's a fair portion of asymmetry, information asymmetry. So how can we bring down this information asymmetry and bring in more real world data to the table and make it more attractive for everyone else to get involved in this industry? So information asymmetry is something that we can perhaps bring down in the future. And here, blockchain perhaps can only play a partial role. You need to add additional stack of technology that is going to allow for that. So for data discoverability, we can use the kind of technology developed by Google, knowledge graphs. We decentralize knowledge graphs, so you can organize the wealth of information and make it available sort of as a decentralized Google, and you being able therefore to find information, and not only find information but also verify it, see what's the lineage of that information, who verified it. And it's never going to be, you know, just blockchain, this trustless system. You're always going to have to trust to the issuer of that attestation. It can be a land registry, it could be a notary service, it could be a Bureau Veritas, British Standards Institution, whoever nowadays plays a role of a trusted third party. However, you know, this trusted third parties need to be described, enshrined in either a public ledger or a level above in the DKG. For instance, in our case, we're working with an association called SCAN, short for Supplier Compliance Association. So you'd have Walmart, Home Depot, Costco, and dozens of others. So pretty much competitors exchanging information amongst themselves to put down the information asymmetry when it comes to the imports to the United States. So they intentionally decided that they'll share information amongst competitors in order to elevate the safety play when it comes to the imports to the States. And again, you would have associations such as British Standards Institution, Bureau Veritas, again competitors coming together and share in order to share that data.
Okay, awesome, thanks. So last question, Josh and Niklas, let's talk about the future. And Stefan, he already mentioned a bit of it, right? That we have an idea about how the world should work in Web3 and with oracles and so on. Where do you see sort of the future with oracles and RWA in maybe more a near term? Where do you see some quick wins and some real adoption on that? And think industries and different implementations.
So I'm sure Stephen can talk about what the future looks like. I've been on many panels with him before. I know he's very good at that. So I think I'll talk about the short term and just talk about like what the sequencing looks like in my opinion. So right now, by far, the most popular product is T-bills. right? And a lot of that comes from that one of the biggest products in DeFi are stablecoins, right? And that a lot of these stablecoins are backed by T-bills, right? And so now the next logical step is like, oh, well, instead of having the T-bills in some kind of, closed off, like off-chain custodian, right, where nobody can really see it, right? Let's bring the T-bills on-chain, right? Yeah, they're still at a custodian, right? But now they have their, quote-unquote digital twin on-chain. So that is already at around, I believe, I think 4.6 billion, which is pretty crazy, that we got from basically 0 to 4.6 billion in like less than 24 months. But where do we go from there, right? I think as like kind of monetary policy rates start to go down, right? This like high risk-free rate versus like risk on assets, right? Is that trade-off is going to get smaller and smaller at the margins. And so what are we going to do, right? What is DeFi's superpower? DeFi's superpower is to issue credit, and its weakness is that it doesn't have enough collateral to grow. Right? What have we seen in DeFi over the past 3 years? Growth is stagnant. And growth is stagnant because there's not enough high quality collateral, right? It's constrained by the growth of the majors like BTC, like ETH, right? And the like. So the promise of RWAs is that you're going to be able to bring in a lot of high quality collateral. But then you want people to borrow against this, right? And typically in crypto, this has been because people want to speculate, they want leverage on those assets. The way it's going to work with real world assets, I think, is slightly different. It's going to be those opportunities that allow themselves, that need financing, essentially, because that's what DeFi can provide, right? DeFi can just, here's some money, right? I want to issue you a loan against your high quality collateral. And so the next step here is once T-bill yield is gone, well, let's step into commercial credit. Let's step into other kinds of fixed income. Let's step into some structured products. That's what the next 12 to 24 months are going to look like, right? It's not, as much as people talk about, we're going to bring the real estate on chain, or, we're going to have a tokenized Tesla stock on chain. The market for that, at least in the short term, is questionable, right? Tell me who is this magical person that's going to buy Tesla stock on chain instead of through their broker. This flywheel of DeFi being able to issue credit and RWA opportunities that can leverage that credit, that's what's really going to be fueling the growth in the next couple of years.
Okay, awesome. Josh, you want to take a stab at that and end the panel? We're running on Swiss time. So
yeah, sure. Look, in terms of short-term stuff, I'm more about the big picture, like what's the internet look like in the next 10, 20, 30 years? That's what Moosh is, social graphs, a new internet. But just to lead on from what you were saying, there's we talked about bringing traditional assets into DeFi. There's actually some quite considerable outflows from DeFi into TradFi. So we're actually struggling to maintain the capital that's moved in. And the trade-off people have in terms of investment opportunities is you have really attractive yield in DeFi, but it comes at a cost of a different type of risk, which is protocol risk. Is it going to get drained? Is it all those kind of things? So the immediate thing I think is going to happen is the oracles that deal with identity, right? So because in the traditional world, in the traditional space, you have KYC, AML, all this stuff, which makes your risk a lot lower, but the yield isn't as great. So there's going to be the sweet spot between TradFi and DeFi where you come in, okay, the protocols are there, but it's backed up by people who are held accountable, entities who are accountable, and those identities come on chain. And a different panelist said earlier, look, the problem with being on chain is everything's transparent. Well, there's ways to go around that. You can bring your identity on there once and then just share basically, look, I verified my identity over here. You can use soul-bound tokens. The technology's existed for 5-6 years. Different conversation. I don't think Web3 exists yet, but you can find me afterwards. So do we actually want to bring these assets in now? I think we should wait a bit. But yeah, I think it's going to be about the identity piece and having that accountability brought on chain.
Okay, awesome. Thanks, Jens. This was very insightful. I think if you guys want to catch some of them after they are available, at least you can try to grab them before they run out of the door. So thank you, everyone.